The Goods and Services Tax, or GST, in India is a significant tax reform aimed at streamlining the country's complex tax structure and promoting economic efficiency. Here's an overview of its rationale, structure, and benefits. Rationale for GST: Simplification of Tax System. Prior to GST, India had a multi-layered tax system with various indirect taxes levied at different stages, such as excise duty, VAT, and service tax. GST aims to consolidate these into a single tax system, simplifying compliance for businesses and individuals. Reduction in tax cascading. The previous system often led to tax on tax due to the lack of credit for taxes paid on inputs. GST provides a mechanism for input tax credit, which helps eliminate this cascading effect. GST introduces a uniform tax structure across the country, ensuring a consistent tax rate and preventing tax evasion. This uniformity is intended to create a level playing field for businesses and improve competitiveness. By broadening the tax base and making the tax system more transparent, GST aims to enhance revenue collection and reduce the scope for tax evasion. GST helps integrate the Indian economy by removing interstate trade barriers and fostering a single national market. This integration is expected to boost economic growth and facilitate easier movement of goods and services across states. Structure of GST. Dual GST System. India implements a dual GST system, which includes Central GST, or CGST, collected by the central government on intrastate supplies, State GST, or SGST, collected by the state governments on intrastate supplies, and Integrated GST, or IGST, collected by the central government on interstate supplies and imports, which is then distributed between the central and state governments. GST Rates. Goods and services are categorized into different tax slabs, including 0%, 5%, 12%, 18%, and 28%. Certain items are exempt from GST, while some goods and services may attract additional cess, like luxury goods and sin items. Input tax credit, or ITC, is an integral feature of GST. It allows businesses to claim credit for taxes paid on inputs, which can then be used to offset the tax payable on their outputs. This feature is designed to reduce the tax burden on businesses and enhance tax neutrality. Compliance mechanism under GST involves regular filing of returns, including details of sales, purchases, and tax payments. The system is supported by an online portal that, facilitates easy compliance and tracking. The benefits of GST are numerous. It simplifies the tax structure, reduces the cascading effect of taxes, and promotes economic efficiency. Additionally, it enhances the ease of doing business and fosters a unified national market. GST simplifies the tax structure by consolidating multiple indirect taxes into a single tax, reducing the complexity of tax compliance and administration. By eliminating the cascading effect of taxes and providing input tax credits, GST can lead to a reduction in the overall cost of goods and services, potentially lowering prices for consumers. The uniform tax system and elimination of state barriers create a more predictable and conducive environment for businesses, promoting investment and growth. All right, let's talk about increased tax revenue. GST's broad tax base and improved compliance mechanisms are expected to enhance revenue collection, supporting better public services and infrastructure. Moving on to enhance transparency and accountability. The GST framework promotes transparency in the tax system through better documentation and electronic filing, reducing opportunities for tax evasion and corruption. Now, let's discuss the boost to economic growth. By fostering a unified market and reducing tax-related distortions, GST can stimulate economic activity and contribute to higher economic growth. Overall, GST represents a transformative step in India's tax landscape, aimed at improving efficiency, transparency, and economic integration.